Hey traders, this is Shogun Chart 247. I train traders how to trade in harmony with the market. So today is Wednesday, the 5th of November. Can you imagine we are in November already? So we're going to be doing some trading today. I'm recording this live trade on the Canadian dollar Japanese yen. I'm going to explain this quickly. Okay, the first thing I'm looking at here, let's squeeze the chart. We can see this thing has been in a uptrend, very strong uptrend. Just keep an eye on the magenta line. It's making series of higher highs. Then we broke down here, which gave us a higher lower low structure. Then price made a high with a completed wave structure, 1 3 5 then 1. That means this here will be taken again at some point. Then we had a correction, which is strong. Okay, we can see 1 3 5 1 3. Now we have to, when you are seeing a price coming down like this, and this is one thing, this is one of the fundamental principles that we trade by. We're looking at the internal pullback. When the magenta is going down, we're looking at the pullback of the aqua lines. Okay, and we want to see a trend changing pattern in those pullback. And here we did not have a trend changing pattern, but before that line, this one here gave us a trend changing pattern. Firstly, the aqua gave us ABC. In that ABC, we have the level line, which is the color changing lines. We have lower low, lower high, higher low, higher high. The break of that higher high is trend changing pattern. So we had 1 and 2. That confirms that at the low here, the first pullback, when it is taken out, that will be the beginning of a resumption of the major trend, which is the magenta line. It's easy for us to use this color coordination because we know what we're talking about. If I'm teaching and I'm saying just look at the magenta line, what is it doing, then you understand that. Look at the aqua line, what is it doing? Look at the internal green and red lines, what are they doing? Okay, so basically what we have now is this. Okay, now we're coming down to the wave of success intraday trading or day trading. We have buy stop, sell stop. The idea of trading is very simple. The banks provide liquidity. So I'm going to explain this because in the textbook, what most textbooks will write to you or will tell you is when you buy, you place your stop loss at the low. When you sell, you place your stop loss at the high. And the highs and lows that we are referring to are not just the swing high, swing lows. Okay, I'm sure by now you will know that those things don't work. Okay, well, what I want to explain here is this. The banks, when they show you price going up like this, that's ABC. As soon as that ABC is broken, we have an uptrend. We now have series of higher highs and higher lows. There's the higher highs, this is the higher low, and this is the higher low. Now we have an uptrend. At this high, every moving average indicator will turn bullish. But if you go and buy here, you will lose money because that's the high. And the idea is at the high, when price becomes too at the high, price becomes too expensive. What will happen? Discount, which is also what we know as the pullback or secondary trend. That is the natural flow of the market. So now let's go back to our drawing. So when price gets to the high, That is when the moving average or the indicator people are seeing this trend. They will now start to buy. The price will come down, give you a new higher low, but it will fail to continue. It will give you a lower high. Then it will break down. Oops, the people that bought here, they are placing their stop loss here. They've taken them out. But at this point, these people may not be satisfied. That is why we don't try to take a trade here, because this is just the first structure. We want to see a break. Once they break here, now if they come back above this level, if they come back above this level, we can say to ourselves, that is good enough. We're going to enter the trade for a break of this high, which is the momentum high. That's the highest point when price became too high. All what the banks are doing is they are taking the stops here and here. Once they take the first one, second one, the third one should give you enough indication whether this trend is going to continue. Then we're going to place our stop loss here because they've broken two stops. And the second stop, once they break the second stop, that's where we want to enter. And you can see the buy stops there. Okay, people that are buying, that's their stop. Their stop has been taken. Now we are buying. So with this system, you immediately know where you're going to be buying or where you're going to be selling. There's a potential for sell here if they give us the sell. So that's basically how to trade the Wave of Success methodology. There are subtle things that we learn. We know the rules are very simple, articulated, well-defined rules that we follow. But what I've done over the years is to simplify the execution model. The simplification of this execution means I do not have to teach you for 6 months before you start trading. Okay, you can, by the time you understand the trading, teaching the practicals and the theory part of the methodology, I'll probably say takes about 3 months. Okay, then we get you to demo trading, which is live prices like this that you can trade. But what that means is you are now developing skills. You are now, everything you've learned over the last 3 months, you are putting it to use. You are making the mistakes, you are recording the trades. I can give you feedback on those trades. Then we move you when you are comfortable, when we've done like 50 samples of trades and the mistakes are now becoming very few, very rare, that it's now becoming natural to you that you are following the rules and the principles. You don't even have to look at your notes to know what to do. The templates that we use, we have different templates, but this one is the latest one that we're working. It's just waves, because the reason we use waves is this. Okay, I'm going to explain this again because we have time for that. This is it. Okay, price is what we trade. So price move in trends. Okay, so trends, uptrend or down trend. Then trends moves in waves. Aha. These waves we have impulse, or we call it the primary. That's the direction of the trend. Okay, and that is why those internal waves are very important. These internal waves here. Okay, there's another wave that we use to determine what's going on with the internal waves. You can see the ones that draws the higher highs, higher lows. This one tells us, there's a momentum here. Look at that. In one single internal waves, we have higher high, one higher high, two higher high, three higher high, four. That is a directional wave. Okay, followed by the pullback, which is the second wave I'm going to write here. Okay, corrective waves, or secondary trend. And this, I said trend. And these waves are the ones that helps us to get into the trade at the best possible price. Okay, the internal waves. We call this is an internal wave. The red and green lines are internal waves to this magenta line. The magenta line is an internal wave to this. The aqua line, sorry, is a internal wave to this magenta line. Okay, and the orange line is the intermediate. We use that for extension waves, for when I cannot explain that now because price get into a stretching mode sometimes when the trend is very strong, okay, and it's just going in one direction. That is when we call this into play, and that is more the explanation of that concept is actually is more than my students. They don't even start to learn this wave, how to trade this wave, this intermediate wave, until maybe after 6 months when they are now trading live money. Okay, because that is the game changer, and I'm not ready to talk about it here. But what I'm talking about here alone, you can trade with what I'm just sharing this morning. Okay, so I've spoken about the corrective waves. So that's basically it. Then we execute flawlessly, place our stop loss, look at area of target. This one is telling us 109.39. I'm thinking, where's the 109.39? Somewhere here. Let's put a line through 39. Squeeze the chart. It's above there. And no. Okay, above this lower high. So that's the 41 as the baseline of yesterday. It's not important. Let's look at the Murray levels to see the potential. Okay, now it makes sense. The 4 of 8, 37, which is nothing, is very close to 39. So that's why this is telling us to look at this area for the first target. Okay, and that's what we're going to do. Price launched from the -1 of 8. Another cool thing that I need to talk about is the Murray principle. You know, when I found Murray math, I think about 8 years ago, I went to, I can't even remember where I learned about Murray math. But I studied it and I found out this is a cool methodology. This is a mathematical genius. Then slowly I've learned to use it. Simplification. We look at the launch pad. So we can see these are our major launch here, starting from the -1 of 8. And the Murray principle states that, okay, the Murray principle states that price going down will have difficulty at 1 of 8 or -1 of 8. Difficulty means continuing to go down. Okay, so just look at this chart. Okay, that's the 1 of 8. They did not have any difficulty. They had difficulty because price stopped there a little bit, consolidated, then broke down. That's 1 of 8. And guess where the price stopped completely before we saw this momentum? -1 of 8. So does the Murray principle make sense? Yes, it does. Okay, price going up will have difficulty at 7 of 8 or +1 of 8. That means when the price turned into an uptrend, this was a downtrend. We had a little bit of difficulty here, but eventually they stopped here. We saw the momentum rally. Then now, if we turn to an uptrend, what does that mean? That means the aqua line turns to an uptrend that's giving us series of higher highs. it's going to have difficulty first here, which is 109.96, and the next level is plus 1 of 8, which is 110.35. That is basically what I've just done here. I've just demonstrated a simple methodology which is price based, incorporated subtle external methodology, which is something that helps us to make trading decision even more accurately and effectively. And that is the wave of success methodology, my friends. The what I'm doing is I teach people. I spend my time. I trade as you can see. I'm trading live, and I mentor people because you need to be mentored. You cannot go and watch random YouTube videos or even follow all these gurus that are lying to people. Come and do this workshop, come and do this 7 days thing. It's more than that, because trading is psychology. And when you start to trade, you start to see why you're making mistake. But you need someone who has gone through that phase, who has done the work to help you or guide you to become a consistently successful trader. And that is where Chat 247 Academy comes in. That is where I come in. I sit with my student 2 hours every week, individually, okay, not a group session. It is personal because all the sessions are recorded. They have the videos. They can watch it again and again and again. So that, my friends, this in a nutshell is the templates, advanced templates that we use for the first starters. They don't use this type of template. We just simplify things because what I've just done here is a multi-layer analysis. But eventually, by the time they are ready to trade live money or real money, this type of analysis I will be expecting them to do in order for them to be consistently successful. So if you like what you see, give us a thumbs up. My name is Shogun Chat 247, and I hope to see you in the next video. God bless.